Hello everyone, I want to share with you quickly the Goldman Sachs prime brokerage flow data representing their hedge fund clients, telling us what they have been buying and purchasing and selling, right? So this is for the week, so last week, the week ending on October 11th. And actually the hedge fund has been selling China fund, okay, Chinese equity fund, because if you look at my last video, I've been telling you that at the fund level representing ETF and mutual fund, Chinese fund was the most bought or saw the largest inflow on record. But that data was released by Bank of America. But again, that data on previous video represent ETF and mutual fund, meaning everybody can buy it. So a lot of retail investors can buy it. Not only the institutional investors can buy it, right? So at the fund level, we saw the largest inflow for last week, but the hedge funds, the smart money, what they are doing is last week they're selling it for a crazy amount, okay? And it's actually the first time for the hedge fund to sell in the past 4 weeks for the Chinese stocks, okay? And 4 out of the past 5 trading days were net selling for the hedge fund. And actually, last week's net selling was so large, it's the largest on record. It's actually right here, right? Look at this line. It's below the -3 Z score, meaning it's lower. It's below the 3 standard deviations. So pretty much, it's saying that only 0.3% chance of this event for this event to happen. Okay, that's how rare this event is. Again, the largest net selling on record. Okay, and nearly 60% of the net buying for Chinese stocks since the peak has been reversed. Okay, has been reversed. Let's look at the U.S. equity flow. Okay, in the last video, Bank of America shared with us that the net flow for U.S. equity was zero. Okay, net zero. But again, it's capturing ETFs and mutual funds, so everybody have access to them, including individual investors, retail investors, right? But this one is hedge fund. So as we can see, the hedge funds are actually net buyers of U.S. equity at the fastest pace in 4 months, okay? And the net buying is represented in black over here, okay? And it's after 8 consecutive weeks of selling. It's a reversal, okay? And this net buying activity was primarily driven by single stocks, represented here, okay? Single stocks in black, okay? And the macro products like the index futures and ETFs is over here. Okay, it's mostly driven by the single stocks, with the largest buying activity seen since December of 2021. Okay, and out of 11 sectors, 7 were net bought during the week, with the most buying focused on healthcare, financials, industrials, and information technologies. Right, we have healthcare, financial, industrial, information technology, and the blue bar represent the past 5 days net flow. Okay, as we can see, there is the most net purchased sectors, and the worst or the sectors experienced the most net sold are the high dividend yield sectors, such as we're seeing real estate. We're saying there's also utilities and also consumer staples. Okay, consumer staples, and we also saw like consumer discretionaries, but mostly utilities and real estate are the most net sold for the period. Okay, and let's look at the regional flow again on one chart. Okay, on one chart. So this is our regional flow and weighting comparison against the MSCI All Country World Index. Okay, pretty much on the left is like what has been bought and sold and shorted. On the right is comparing to the index, All Country World Index, pretty much saying how much does your region weight in that index. That's a market cap weighted index. And how is the hedge funds positioning against that index, right? So it's kind of useful. So for if we take a look here, right, Asia x Japan, okay, Asia x Japan, so largest player would be China in this region, okay? The selling for the week is at -2.82, okay? That's the selling of the week. And the shorting is -1.2, okay? That's shorting. Okay, and that means 2.82 minus 2.82 standard deviation. That's minus 1.2 standard deviation. Okay, and even though there is a huge outflow, the hedge funds are still, if you look at over here, 5.4 and 5.4. Black represent the weighting for the region in the all country world index. The blue represent is the hedge fund underweight or overweight the weighting in the index. Okay, so if you look at the blue, it's telling us the hedge funds are 5.4% overweight compared to the weighting in the all country world index for the region of Asia ex Japan. Okay, still overweight. And if you look at Europe, okay, Europe is still overweight by 5%. So that's the two regions that are overweight. Okay, but there's one region with a substantial amount of underweight, which is North America. Okay, North America currently the hedge funds are like minus 10.7% underweight. Okay, and of course you can observe that in here, right? If you look at the net flow of US, right, since the year to date, it's going down, right? Down almost like to around like minus 20% ish. So as a conclusion, as a takeaway, which you want to clarify, on the previous video, we talked about how at the fund level, ETF and mutual fund, we're seeing large amount of inflow to China, the record amount of inflow to China, but US was net zero for the past week. But in this report, it's representing hedge funds flow, the smart money. We're seeing the reverse. Okay, the hedge fund has been painting a different picture in the past week. They have been selling, record selling Chinese stocks and reversing 60% of the purchase so far. Okay, and they have been purchasing North American stocks. Okay, thank you.